Hey everyone, welcome to the AI Amigos show. My name is James, and with my good friend Token Destroyer, Jin
Hey,
Chao, is here today. Don't think that got past me, Jin Chao. I saw it.
yeah, yeah.
But welcome everyone. We haven't had a show in a couple of weeks. Been time away, and we'll be looking at a possible new time slot in the coming weeks. We will let you guys know when we know.
hmm
But it's been a really packed week well, a week of news. I mean, I say in a week, but it's been more. But this week has been very interesting. I
Yeah,
know we're going to lead with Kimi K3, but
yeah.
just before we get into that, just to talk about OpenAI's model apparently went rogue in
hmm
testing, triggering an unprecedented breach, and it basically went and attacked Hugging Face, which is their competitor, because one of the co-founders of OpenAI is at Hugging Face.
Oh, okay.
So it's quite interesting. It was in a sandbox environment, and then it just went and attacked. Um, Very interesting that could happen. Kind of wondering why. Why did that
Mm,
happen? Why did it choose Hugging Face, and how did it even escape? In my thinking, but it did.
yeah.
So I don't know, but
Sandbox is not so sandbox anymore, huh?
no. Well, this week, Jinsha, I know one of the things you and I talked beforehand and want to talk about the financial aspect of this whole AI
Yeah,
thing. And
yeah.
just thinking about like what happened with OpenAI there that's wanting to go public soon. I mean,
hmm
do you think investors should be concerned?
I I'm not financial advisor, right? But I like to talk about this. It's quite interesting as well because we see a total shift of about a year ago, a year and a half ago, or 2 years ago. When we talk about those companies, there is just a model company, right? There's nothing else. Just like, oh, OpenAI, ChatGPT 3, 4, 5, and then Mistral and all those model companies. They're worth millions or billions money.
Billions, yeah.
Yeah, but now it's because the Chinese models, right? They basically says, okay, we'll make it as good as you. We'll open source it. So does the token worth the money now? I mean, down to the LLM, those kind of AI chain, you need to the very basic. It's infrastructure, electricity, all those needed to catch up. Model seems to be the cheapest thing now. You know what I mean? So how you run your models, where you run your models, and it could be become. We talk about this. It could be become a commodity itself in the future, right? As a token market there, and the future. We know business. They wanted to run. They needed to have predictive, all income and outcome,
Revenue.
right?
Yeah.
Yeah, revenue. How much you're gonna spend this month. So if a company as big as some of those Facebook or whatever, imagine one guy just spend a huge amount of token, you know, and then it's up below all the budget. That's just one guy. What if like 10,000 employee, 10% people doing that? That's gonna be a huge thing. So I was predicting like in the future could be some kind of commodity token market. You hedge against it. You know what I mean? Like, okay, for the next 6 months I need that many token. Let me hedge it. Let me buy some. And yeah, it could be another commodity, and people will be buying crude oil and tokens. Who knows?
Well, I mean, I mean that is an interesting thought, Jinsha, because I mean, ultimately, as you're saying, yeah, I mean, the only reason why we use hedge, we hedge markets is because of, like, for example, what's going on in Iran. I saw it yet again today.
Yeah.
Oil went up $100 a barrel. So if you're an
Mhm.
airline or trucking company or shipping
Yeah.
company, you have to hedge against that, because you can say, well, I have a pricing model that says I charge my customer X, and this is the profit that I make. These are my margins, and I can have some level of predictability and stability of profits. But when you have a commodity like oil that just is subject to geopolitical events like we're seeing, or
Yeah.
wars, it very much you could see where this could happen in the tokens. And we've seen already companies like Uber and Microsoft have stopped using the likes of Claude because their entire AI budget was gone in a matter of months.
Yeah.
And so you could talk about putting controls in and things like that, but I mean, I'm quite taken aback in regards to like, and I'll be honest, when DeepSeek first came out and they said they made $5 million, I said, there's no way. There's no way with a $5 million they did what they did. Now it's come out that it wasn't $5 million, but it wasn't in the billions of dollars at things like OpenAI.
No.
But it was a big shot across the bow to pricing models for AI companies. You know what I mean? So like if you're saying we saw what happened when SpaceX went public, and so now when we're saying OpenAI is wanting to go public, Claude's wanting to go public, Anthropic's wanting to go public. So what price are they going to sell at, and what do we say is fair market value? And then now you have Kimi K3 come out, and apparently they're saying, is this a DeepSeek moment 2.0, where this is kind of going, hold on guys, you're getting way ahead of yourself.
Yeah, I think that's the route. Like that's token usage is so unpredictable, and I mean there's a two route I see it, right? The first is become a commodity, and people can hedge against it. Who's the cheapest one? You buy it and you use it or whatever. The other route is I think Chinese company and models are a way bit ahead of it, right? And then other models has it, but not as detailed as Chinese model. We use Minimax on some of our project, and what they do is their token usage refreshed every 4 hours, and then you can get API calls, not really token usage, will be mentioned on the show quite a bit times, right? And compared to other models like Claude and Claude Code and all that, they're still on that weekly kind of thing, and then there's no clear API calls and all that. It just says, okay, you usage count or whatever, you can see that. So it could be one of those very detailed bundled meal, or like you go to the McDonald's, I have a Happy Meal, I have this Big Mac meal. It's more detailed, and on the request, it can be just on the tokens because task varies, right? So it has to be something easy for business to understand, which is, you make one request, that's this amount of money. Two requests, that's the amount of money. So that's how I see it.
Well, I mean, what about this idea in regards to, you've used AI, I've used AI, and you're in the middle of a project, and then all of a sudden you hit, this happens to me, you hit a usage limit. And to take a phrase from you, Jinsha, I'm going to steal one of your phrases, is I take, maybe because I'm using the biggest model to do a small job, I'm using a bazooka to kill a mosquito.
Yeah.
Right? So the thing is like, is it the best, management of my usage? But if you're in the middle of a project going back to, and then all of a sudden you've hit your daily token limit or your budget limit, do you just shut it off then and go, well, yeah, okay, it's you hit your limit, turn it off? And then it's like, yeah, but it's not done. Everything is taken apart. It's going to collapse. It's not going to work, or whatever it may be, right? I think it's like, oh, geez, that would be so. How do you control your costs? I mean, you can say, well, I control my usage, but I mean, do you know your usage when you're going into a project? You're saying, well, I expect to spend this amount of tokens in this time frame.
I don't think you can. Like the biggest cost.
I don't think so either.
Yeah, I think the biggest cost is not in the project. When you're building something with AI, you know how much you consume. You have expectation. What happens is you're using in the development of it, and it's a totally different story. You could hit the bug, try to fix the bug. Next thing you know, you spend 2 days worth of token on one bug. That's but when we are building those kind of AI apps, you have an estimation, okay, this is how much output, how much we want, and where it's going to is always within the boundaries. But I hit those walls as well when I developed, go one circle back, no, that's not what I want, and go another again, get a fresh window, start over again, and then those are the ones really wasting tokens, I think.
Yeah, well, I mean, and I think I think for myself anyway, using AI, and I don't know if you. So normally, if you say I'm going to do a project and I want to do this level,
Yeah.
and then all of a sudden you got AI and like, no, but all the things that come to my mind, I could do this, I could do this.
Yeah.
Start adding, and that original project that was supposed to be this big is now that big because you can do so much more with AI. But then you start hitting those limits. It's like, you don't even deliver the first. When you talk about like agile, like it's iterative. You iterate and you increase and you make better. This doesn't happen. You just want to get to the end product. You don't iterate. You want to get it done at the very beginning. You know what I mean?
Mm-hmm.
And the first iteration.
Yeah, and I think, like, hence my name, right? Token destroyer. That's how I destroyed 228 million tokens.
Well, never go to the gym and leave your AI working. That's what I heard. Because things can go really bad.
Yeah, and I think there's something that as well. The Kimi, I tried to subscribe it to. Right now, you have to join a queue. At the moment, you can't just subscribe straight away because it's so popular now. And they have some bundle as well, but their bundle is not as detailed as Minimax. But I'm thinking about trying it because I get the seats now. I'm hoping a lot of subscribers subscribe us, so we can have some funding from YouTube incomes to help me to fund that. Otherwise, I have so many different subscriptions. It's costing quite a bit.
Yeah, well, it is, and then you say, "Oh, but it saves so much time." But then you're like, "Actually, I have less time because I'm spending more time to do stuff with AI that I could have done in the first
place." Yeah, I subscribed the Minimax one, right? The $40 one, and which is not there anymore. So I'm very hesitant to give up on that because I had a good deal. And the Kimi, they're a bit more on the expensive side. I wanted to test it out and see. So we'll see where it is. But I got the seats now. I might sell the seats.
Yeah, contact me if you want to buy it.
Contact me if you want to buy it. Yeah, there you go.
So I
started my own commodity first.
You have your own exchange there, yeah. Well, I see here 2.8 trillion total parameters, which is sparse mixture of experts. Apparently, it's only 16 of 896 experts fire per token. So it's huge but efficient to run. And then here we go. The big one is 1 million token context window.
Yeah.
So native vision.
The K3.
Yeah. And then it's his largest open weight model ever. And it basically takes the crown from DeepSeek's 1.6 trillion version 4 Pro. That's a really big thing, right?
Yeah.
But does the biggest ever even matter? Or is it the real headline is that it's free?
Is it free? It's not free, I think. You can't use it for free now because they're large. I tried it in their console, but they just don't have capacity to hold you on K3. You can only try K2.6 now.
Okay, that's interesting because at least from the notes that I have, it was saying here it was free.
It is free, James, but you just can't get onto it because a lot of people are using it. They tell you can't use it.
Okay, all right. Well, that's a really interesting thing, and I think there's a big race for AI, and I mean we talk about distillation, and we know that a lot of these models are distilling from each other. So it's really hard that you go out and you do one first, and then it gets distilled, and everyone's doing it. It's not just I know that we saw a lot of people want to say, oh, the Chinese ones do it, but you saw when Elon Musk during the trial with OpenAI, he said they asked him about did he use his XAI, did he distill? And he said, yes. He said, everyone does it. So he said it'll stand. But
why wouldn't you, right? And compared to like billions of costing, and then you can steal this for 4 or 5 million questions, and then
And then
spend
just
10
release it,
million.
and then release it for free to everyone, and then
Yeah.
an hour, and then
Yeah. So that's
Well,
what I was thinking about. The model is not the money anymore now, right? It's who can connect the models to be used in any professional or professional way, and where it can run it becomes the key,
yeah, that is true. Well, the next part of my segment, because going back to commodity and talking about cash, is Google. So Google apparently has spent billions on their AI. And
Mm,
so if you look at this, their capex guidance is 175 to 185 billion, up from 91.4 billion in 2025.
mm,
That's a lot that they're increasing their expenditure, capital expenditure on AI.
mhm.
But their free cash flow fell 47% year over year.
Yeah. I think a lot of analysts were saying, but even how much they put it in, they're still not enough, because they were saying if they keep going, they could run out of money in 2030 or whatever. That they can bankrupt themselves. And so that's the thing. I think we talk about it on the side. It could be a quite interesting thing to do, because they were saying in the future, and very soon, there's bigger funds to actually invest in them, to put money into it, to help them to grow and get the infrastructure and all that. So one of the funds will be like a pension, all that sort of big funds to come in to buy it. You'd be part of the Google, right? Just like Buffett, Warren Buffett, right?
Well,
So
I mean, they were sitting on a lot of cash. So was Apple, by the way, which is surpassed. They've surpassed Nvidia as the largest company by capital, by capex, or not capex, sorry, by market capitalization. But looking at Google, right? So Google has a lot of assets. So basically, they're not going to go broke, but they could, I guess, if they keep spending at this rate, um, get rid of their free cash flow.
yeah,
That's what that's a
the thing,
big deal.
yeah. I mean, like, you don't want to spend your own money, right? That's the thing. Like, if you can get investor invest in you, why not? And promise a share of the pie, right? So why not? So you hold on to those cashes, and then you borrow in the money, and you can get tax breaks. Why spend your own money, right? That's everybody's strategy.
I call that OP, or it's called OPM, other
Yeah,
people's money.
yeah.
You never
So
want to spend your own money, and very wealthy people in large companies, they never do. But I mean, like that free cash flow is what they leave for like stock buybacks, paying out dividends, any kind of acquisition. And that's evaporating, so they can't go and buy someone. Um, but what are they going to do? I mean, when they start buying and spending a lot of money, and really it's a really really big deal. I mean, and
yeah. We talk about it. I mean, like AI, just thinking about right now, how much Anthropic makes, right? That's only from the big company. How much it makes a year? Like in daily lives, people are not using AI like we do. But just
no.
imagine everybody start to using AI, and the amount of infrastructure needed to cope with it
Well, if
we're
they
not.
start to use it like the way we use it, because I mean,
Yeah,
you
yeah,
talk to people like, oh, do you use AI? And they,
yeah.
yeah, I talk to ChatGPT, and we're like, no. And I've gotten to a point
Yeah.
personally where I don't really start talking to people about it, because it would just blow their mind how AI is being used today, how I use AI, how you will use AI, and how people we know use AI. Because yeah, you can use it as it's a very powerful tool to help you get work done and
Yeah.
automation, and where it gives
It's
you business impact.
it's kind of like the cloud moment, but much bigger, because cloud only apply to IT people and servers and such, right? But AI applies to everyone.
Yeah.
So the infrastructure to run AI, just thinking about how much cloud has grown over the years, how much Amazon actually started doing cloud, everybody was laughing at him, and to now the size of it. And you're talking about AI had bigger customer base
Yeah.
and how much they needed to, because all the big companies are trying to catch in onto the race. They're still late on the infrastructure side.
Yeah, these companies have already bought. I mean, that's why you see like Claude or OpenAI making it, well, Anthropic and OpenAI making deals, which is Claude for Anthropic, are making deals with Amazon because they no longer have the infrastructure to build out. They have the model, but they can't roll it out to everyone like they want to, and that's a really big issue, right? I mean, so and that requires cash.
Yeah, infrastructure, places, locations, policies. It's that kind of race now. Yeah.
Well, looking at both sides of the trade here, because we're kind of dancing around the issue. Now, I say dancing around the issue in regards to, we haven't used the phrase yet, Jinchao, but AI bubble is what we're kind of talking about. Like, what's going to happen? Is the spending too much? And is markets are too enthusiastic? But looking at this, looking at a couple of, I'll give you both sides, a bull case and a bear case. And you always need bulls and you always need bears in the market. So bull, for those maybe don't know, bull is those who think the market's going to go up, and bears are the market's going to go down. And the way it was explained is if you get attacked by a bull, the horns throw you up in the air. So go up. And if you get hit by a bear, the bear pounces you down. So that's how you know bulls and bears, right? So what's that?
I said that's the thing. Yeah, it's so far how I treat it is, so far my neighbor hasn't talked to me about AI like he talked to me about Bitcoin. So I know it's not in a bubble yet.
Not yet. Yeah. Well, they haven't started investing yet, but so Dylan Patel, who does analytics. So I'm going to give you a couple of names there. I don't know who Dylan Patel is, but this is some of the research I've gotten. So apparently Google and Amazon are, in his words, the best capital allocators in history. So free cash flow hitting zero is proof of conviction, not weakness. Trust the operators over Wall Street's jitters. That's an interesting one. So basically, we're to say, Google knows what they're doing. They've not got it wrong before. In my mind, I would go, well, that doesn't mean they're always going to get it right. But anyway, so the next one here, we say CapEx builds capacity for exploding inference demand, and open models still need to run somewhere, which favors the clouds renting the compute, which you're talking about right there. So again, once people start using it the way we use it, with that infrastructure needs to be, and a lot of these guys have already spent a lot of money in it, and it's ready to go. Owning the full stack chips like Google's TPU version 7 data centers power is a doable moat. So a moat to protect you against other business taking away your business. It's a durable moat cheap models cannot replicate. That's it. So here we go with the bear case. Okay. So Goldman's Jim Covello says the industry has moved further away from justifying the spend. It's FOMO, not organic demand. So there's a fear of missing out, because if you get it wrong, you're going to get it wrong big, right? So this winds up being really big. Companies like you mentioned earlier, like Google or Amazon, they could be gone tomorrow. Someone come and buy them and take them out, and they're gone because they're them spending all this cash leaves them in a vulnerable position for takeover. Right.
I think it's a good thing about this. If we call it bubble, it could be because there's two different sides of it as well. I see, as those are the company do see the growth of it, and they put money into it trying to catch up. At the same time, the trading side is crazy as well. And I read something like for this recent crash, right? A lot of those AI stock go down. Right, and including the company called Micron or something. That's the chip company or the developer.
MU.
So, like they were saying, a lot of people are heavily buying them, leveraged on those kind of thing, and then now they just crash to 5%. They start to clear out their account to go to, and then trigger another one. The interesting status or numbers is like 60 or 70% of the young people in Korea was buying some of those stocks related to Samsung or the memory, and a lot of them are losing money now. And you're thinking about how big is that? Like Korea is a small country, 60 or 70% of young people are buying stock about this. So they're chasing the FOMO and without really looking into much of the company finance. And their view is totally different than what Google is doing. They see the growth and I wanted to buy it. And as Google says, I wanted to buy it, and they put money into the infrastructure. And yeah, they're a bit different route at the moment, I feel.
Well, what you're saying there is I use leverage, and when you leverage yourself, you get a margin call because stock drops and you've borrowed, and all of a sudden,
Yeah.
so you got one of two options, which is one is you put more cash in, which
Yeah.
not a cash, or number two, you sell your positions, and you're like, this is the last point out. This is not the best place to sell this position because it's dropped, and now I solidify my losses.
Yeah, but you don't have the guarantee money they require from the platform, is there? So they lost it. Yeah. So yeah.
Well, a couple of interesting points here as well, Jin Chao, is it says, I like this one point here, which is very true. The CapEx doubling leaves limited free cash flow in 2026 with uncertain return on investment. Have we seen a return on investment on AI for these big spenders yet, right? Wedbush says, recent large caps tech weakness reflects the fear about the timing of returns. And then look at this, the commoditization or commodity, but commoditization paradox. I know I'm pronouncing that wrong. Commoditization. Yeah. Anyway, if K3 class intelligence is free and open, proprietary compute becomes a low margin utility, not the moat. So basically you bought an expensive hardware that no one's going to want because they got the free stuff.
Yeah. I mean, like the only software LLM company, Anthropic, makes money. I don't think any of those infrastructure big cloud guys are making money at the moment. Because
Anthropic made the first time they made money was, I think it was the second quarter. But the problem with that is that a lot, in my opinion, is we've seen big companies like Uber and Microsoft cancel their subscriptions because they've used. And so for me, is it repeatable? Is it sustainable? Are they going to be able to do it again? Or was it just a one-off? Yeah. Yeah.
Yeah, from the cloud code, it has to be something more surgical, like Palantir, they're trying to take each other's cake, but I feel Palantir has a lot more stuff under their sleeves, and than the cloud code and Anthropic. So they're a bit more surgical on stuff. They have to send people to your company and all that, kind of like what do you call it? Kind of like a consulting company, but they're on the front line with you and trying to mold the AI to your use. I think that's something we might see more and more of it.
Well, it's as they say, the old Chinese proverb, "May you live in interesting times." And I know it's not a good thing, but we are definitely living in interesting times because on one end where everyone's afraid AI is going to take over their job, and on the other end, we're seeing that AI is not delivering the return on investments that a lot of people. But I mean, if you think, I would say all of us have lived through the .com, but that's when I first started in work and becoming a financial advisor and a broker. Was during the .com bubble right before, and I remember the euphoria. Everybody was, but at that point, I remember they were like investing in stupid companies that had never made any money, and we're kind of seeing a little bit of that. But
don't you feel like, I don't know if it's because the social media or something? There's very little of one side. Now one side story. Now I remember 2008, everybody like, oh, it's so rich, and we're gonna go on with the stock, and .com is the same, right? As nobody see it as kind of crushing it. But every single time now, if something boosts up, there's always equal amount or 30%, 40% equal amount of negative sound in there. So do you know what I mean? So there's always both sides. Somebody calling a bubble, somebody not. So in that case,
Yeah.
would that really bubbling it? Because most of those financial crises caught us because we're not aware of it, or very few people aware of it.
So you're talking about a black swan event, is what you're talking about.
Yes, because normally it's like people are one-sided, and that's where those least expect happen. But since we have a lot of people is calling it a bubble, would that really happen? Do you know what I mean?
Yes. And you're and yeah, where it's obvious to everyone and they're going into it. I mean, when we looked at the housing, right, and there was like these subprime mortgages, and this was during the financial crisis, where people were like getting stupid money. Like there was like what were they called? I mean, I know there was this acronym where it was Ninja, no income, no job. Something like that. So NING. So there was like no income, no job. Something, I don't know what the A stood for, but apparently that stood for people that were getting mortgages that should have got a mortgage. They don't have an income, they don't have a job, but yet the bank was approving a mortgage for them. And you're going like, and there was just so much money that was flowing into it that it was stupid stuff. And I guess to a certain extent, there is a bit of that going into AI where it's not smart money. People are just jumping on the bandwagon, and you go where the money goes and the flows, and you try to ride that wave. But and then as we say, everyone's dancing until the music stops. And so the question is, when is the music going to stop? And when the music stops, who's going to be holding that bill? Well,
the only thing before you can actually go into those, you can buy a house and do stupid things with that, right? Get that will crush the thing. But right now, I feel like that the everyday people knows, oh, AI is so great, but they're really not participate with it. It's only the stock guys. Oh, it's good, and we're gonna invest in this. It's gonna be a huge return, and then would it really crash? It's not many of those everyday people actually jump into the bandwagon and says, "Oh, AI is good. Let me buy 2 million tokens. Have a fun with it." So.
Well, the stockbroker's always going to tell you it's good. He wants you to buy, Sorry, that's what I used to do. So I know a bit about that. So yeah. So with that, we'll leave it here, Jinxiao. It'll be an interesting week going forward. I wonder what's going to happen with OpenAI in regards to their what do you call their rogue model that went out. But so I think we'll have some interesting things to talk about next week about this.
Yeah.
Still not sure what day of the week. We'll let you guys know when we know. We're just sorting out a few logistics or scheduling and how best to do it. So we'll let you guys know when we know. So with that, thank you, Token Destroyer. Great chat as always. Thanks everyone for joining us, and we'll see you guys next week.
Bye now. Bye-bye.